Hello from Trend Signal for a review of the data and events the week beginning the 10th of April. A shortened holiday week this week for Easter, Good Friday on Friday, obviously with markets shut in Europe, US and a large chunk of the Far East and Australasia. We've also got next Monday off in the UK, that's Easter Monday, so that's also a holiday in the UK. Last week, markets started to question the Trump trade. Equity markets were flat to a little bit lower, really. The dollar continued its recovery from the early March lows, whilst commodities were affected by the increase in geopolitical risks. In fact, those markets were dominated by global macro events last week, and as usual, it involves Mr. Trump. No surprises there. I guess what was a surprise was that Trump's volte-face over Syria and his military intervention, which I'm not sure what caused that change of mind and heart, but Sean Spicer, the rather curious White House press secretary, said that Trump watches TV a lot. There we go. And was moved by the pictures from Syria, and I guess we'd all say we were moved by those, showing the dead and injured from the chemical attack. So 59 Tomahawk cruise missiles later, the US now no longer has this sort of love-in it has with Moscow. And whilst Moscow has attempted to defend the indefensible over the use of chemical weapons by Assad, it has ratcheted up a few notches, I guess, the tension in the Middle East and between the two old superpowers, although some might debate whether Russia is a superpower. Market reaction was somewhat muted, really, following the attack on early Friday morning. Despite the initial risk-off move, equities did recover, trade actually higher on the day, and that was despite the surprisingly poor non-farm payroll data. So what does that tell us? Well, I guess the reaction seems curious in a way, because an increase in geopolitical risks is not good for markets. It increases a more defensive tone in the markets. I guess what the missile attack did do was perhaps reassert the US's position a little bit in the Middle East and with Russia. Putin, you could say, has had a pretty much a free rein and was surprised, I think, by the move. And Russia said that the US action was illegal. Quite interesting to hear that from Russia. Somewhat ironical, bearing in mind Putin's annexation of the Crimea from Ukraine. But the threats by Russia and Iran that further action by US could result in a military action by Russia and Iran, I think it's probably more likely saber-rattling, but an unlikely event, for now at least, anyway. Of greater significance to the markets is that the action underlines Trump's, I guess, more determination to get on with the job. These concerns over the Trump trade and questions whether the rally might be running out of steam, I think were answered in a modest way Friday, despite that surprise miss on non-farm payroll. What the Trump administration's actions did Friday was to propel the dollar even higher. We're now some 320 points lower on the euro versus the dollar. We hit 109.07 against the euro on the beginning of the month. So, yeah, ironically, the strengthening dollar has had a negative effect on dollar-based commodities, at least some of them, which have benefited from the geopolitical angst, of course, but gold did fall back from its new high for the year at 1272. But generally in commodities, they benefited from the geopolitical spike. So, for their defensive qualities, of course, crude oil, an immediate beneficiary, not just because of the geopolitical focus, but because obviously Syria's in the Middle East with implication for oil supplies should events take a more unwelcome turn or direction. So data and events this week. Let's have a look at the calendar. Shortened week because of the Easter break. We had some weak non-farm payroll data last week, although the reaction was fairly muted. The ADP data was surprisingly strong last week, but the number can be a bit volatile, and I think we all regard that as not a good short-term guide. Sterling had a volatile week, poor manufacturing and PMI and construction data, but then we had a very good services PMI numbers. So let's have a look at the data then. Monday evening we got Janet Yellen, chairperson of the Federal Reserve, speaking at University of Michigan later on in the evening. Hot topics for further interest rate rises in light of non-farm payroll maybe, and obviously the debate about trimming the Fed's balance sheet, which cropped up in the minutes from the Federal Reserve last week. Tuesday, UK inflation data, or CPI, Consumer Price Index as it's referred to, holding a lot more relevance these days as price pressures pick up in wake of sterling's slump post-Brexit. Slight softening in the number from the previous month, but still above 2%. Wednesday, we have Bank of England Governor Mark Carney speaking at a conference in London. Could be quite interesting for the UK markets and the Bank of England especially in light of the allegations from the BBC about LIBOR rigging and the bank's involvement, alleged involvement, I should say. Average earnings as well out Wednesday. Sensitive subject as inflation picks up. What government and workers really want is wages rising faster than inflation, obviously. We'll know after this figure if that is the case. Bank of Canada rate decision later on in the day on Wednesday. No change expected there. Jumping through to Thursday, we've got probably the next important bit of data really is the US Producer Price Index, the cost of goods and services going into production. Could say it's a bit of a leading indicator, obviously, to CPI or inflation. So that tends to get watched, but there's no pressure there in the US from that anyway. University of Michigan consumer sentiment number again, a very healthy reading of the consumer sentiment in the US. And then Friday, surprisingly, but it's something that happens every year, although it is a federal holiday in the US, there are data releases. And you might wonder how is that case, but they're always, sometimes we've actually had non-farm payroll released on Good Friday, which is quite curious for such an important number. But we got inflation data and retail sales due out Friday. The key point about that is not just what the consensus is, but the fact is markets are shut, so they won't have an opportunity to react to this data until Monday. That's for US markets, but of course here in the UK, we won't be back at our desks until Tuesday morning. So, yeah, just one of those interesting points, but that data, that's not a misprint. The data is actually coming out on Friday. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.